All right, you look at crypto finance, you look at only a handful of companies who've been able to kind of master the waters of what's happening both in the loan side of things and also kind of the overall services packages that some of these companies are bringing to the market. So we thought, hey, let's get some people on today. None other than Alex Mashinsky from Celsius. Great to have you on the show.
Thanks for having me back.
All right, so let's take a look first at Celsius. For all of our listeners, you know, we kind of do these CEO interviews from time to time. We try to dive in as deep as we can and kind of get some answers for the listeners, kind of going in the direction of where we get most of our comments and things of that nature, Alex. When you look at Celsius as a whole, you guys have gone into a few different areas, but I want to dive into where you guys are going in terms of the overall, when you look at the overall global impact of where crypto is moving. Kind of give me your framework of what you guys are looking at from a strategy position.
Sure. So, you know, we're seeing continuous, continuous printing of fiat currencies by central banks all over the world, which is effectively recruiting customers. The best way to recruit customers for crypto is for the central banks to continue printing, right? And Celsius is a hodler community. Most of our users are savers. They basically want a store of value that is not denominated in their own fiat currency. And we now have close to 1 million people worldwide. They represent the silent majority of the Bitcoin holders, of the Ethereum holders, because they just basically buy the asset and sit on it. They don't trade it. They don't try to time the market and so on. So our strategy has been to create continuous yield for these customers. And also when they need to pay bills or whatever else, make sure that they can get a loan in fiat, not sell the asset, the underlying, but just take a loan, pay the credit card, pay some bills, you know, the mortgage, the student loans and so on. So that's been working very, very well. Anyone who followed the strategy over the last 12 years did very, very well. It's the best performing asset in over a decade. So we're sticking with it.
Yeah, well, I like, and we've had Michael Saylor on. He's a big proponent of this model, you know, for essentially never selling the asset class, looking at utilizing loan and leverage to essentially kind of essentially really not have to worry about taking taxable events for a very long time until you're ready to maybe look at a retirement or passing that down in his particular case. When you, okay, so you see the landscape going around what's happening in China from the digital yuan to what we've seen in the UK, what we've seen here in the US, all trying to go in the potential direction of a digital or a digital currency in general as a sovereign utility. How do you see this moving and impacting companies like you in the future? China, of course, they've made their bet. It's going to be the digital yuan. The likelihood of the US coming in with digital currency in the next few years is probably real. How would that affect what's happening at Celsius?
Sure. So first, there's basically a 3-horse race here. You have the open, decentralized options, which are obviously Bitcoin, Ethereum. There's hundreds of them, but they're all decentralized, and many of them have limited supply, right? So Bitcoin, know, you're only going to get 21 million coins. Then you have the corporate versions. So if you look at JP Morgan or Facebook, and then you have the CBDCs, right? Like the Chinese yuan. So those are the 3 competitors. Everybody has to understand that a digital yuan doesn't mean it's limited supply. It's actually unlimited. It's exactly the same thing as the fiat currency they have today. And unlike the United States, where we let the open market, we let basically companies compete with each other for the digital dollar. I don't think that the Fed is going to issue its own version. I think it's going to let the market, the commercial market, kind of continue grow and explore all the options, all the varieties of the digital dollar. And that's going to compete against that centralized communist version of the Chinese yuan, which is effectively China is clearing the way for the yuan, throwing out anything that may be competition for their own digital currency. But everybody has to remember it's just another version of an unlimited Bitcoin. It's not like they created something new. So every one of us has to choose who we bet on. What are we focused on? Are we believing in limited supply, or we believe in unlimited supply? And make our own choices as to what is going to store our value, the hard work we've created for the long term.
All right, so I like that approach in the sense that, you know, when you look at investment classes, and of course, we'll most likely see some regulation in the coming years that will start to move crypto into a legit investment class that's going to get regulated, scenarios like that. Do you think that's a good thing that we'll see regulation coming in?
Yeah, so first, Celsius does not pick winners and losers, meaning what we hold in the wallet, which is now 42 different assets, are assets that earn yield. You get to choose if you want stable coins or staking coins, or you like something else. As to regulation, it's not clear. The regulation is not consistent around the world. And we serve over 170 countries, and we have to be compliant in every country we operate in. And the laws change. Like the UK laws just changed. Japan has clarified further what's happening. In the US, we're waiting for the SEC and the CFTC to kind of tell us, okay, what is a security, what is not a security. Celsius is on the conservative side. For example, we just introduced BNB into the wallet, but we did not provide it as an option to US users, right? It's only available to international users. So for each coin, for each token, we basically take the conservative approach and limit the access. But then when we get clarification from regulators, then we change it and enable everybody to use it if it's possible. I think regulation is a good thing. Crypto is just another asset class, and it doesn't make any sense that we know everything about gold and how to use gold and what is the right way and what is the wrong way, but we don't know that about cryptocurrencies.
Yeah, that's for sure. Alex, you've been talking about a prediction, and I think it's been one that people have kind of attached to because they love Bitcoin, and we've seen your year-end prediction at 160K. Your thoughts on why you think it's going there? Because there's a lot of people that are kind of maybe a little softer on it, or in some cases, maybe a little stronger on it. What are your theories there?
Yeah, so my prediction was, again, 140 to 160 as the peak for the year, but closing the year at below 100,000 because we are going to have some sellers and we're probably going to push the price down.
Sure.
Currently, we are experiencing some resistance, and part of it has to do with this flash in China. Basically, miners representing half of the network are being kicked out. They all have to basically liquidate some of their positions to fund their transfers and transitions, close loans and things like that. Then also we have this unlocking of GBTC. So there's 4 or 5 billion being unlocked. There's a total of 20 billion that is trying to get out or sell. So all of that is putting pressure on the price of Bitcoin. But I expect us to get through that in the next few weeks, and then there's not really any more resistance. So I'm tracking new wallets. I'm tracking how much activity we're seeing on the Celsius network. Are our customers accumulating or are they selling? And based on that, we know what the supply is, 6.25 Bitcoin every 10 minutes. So that's fixed. We just have to worry about the demand. And the demand is accelerating across the board. All-time record new accounts, all-time record of accounts holding more than one Bitcoin, and so on and so on. So those are indicators that tell you that if you take out the noise, which is China and GBTC, we should be hitting new all-time highs.
So you feel pretty comfortable the bull market is still intact. It hasn't crumbled yet for this particular cycle, and it's likely going to be there. I like that approach. That's a good explanation. I think a lot of people are trying to understand what are some of the reserves that are not allowing Bitcoin to break through, especially around that 40K mark that seems to be holding it back. Talk to me a little bit about...
You have to remember that, just one more point that I think is very important. So the Fed continues to buy $120 billion every month, right, of treasuries. So, On top of it, they printed in the last 12 months, 40% of all the dollars that existed over the last 200 years were printed in the last year, right? So if you don't think that there is a 40% inflation last year, I know the CPI, they're telling you the CPI is 3 or 4%, but in currency terms, in how many new dollars were created, inflation is over 40%. So,
Yeah.
so if you don't feel that yet, it's because most of that money went into the stock market and other markets. But all that is going to trickle down into higher prices, and your hard-earned dollars are going to earn less and less and less, right? So
Yeah.
the beauty of what's happening today is that a Bitcoin is still a Bitcoin. It used to cost $100 to buy one. Now it costs $35,000 to buy one. So the Bitcoin stayed the same. It's just how many dollars it takes to buy one that has changed over the last 10 years.
Yeah, which is indicative of an asset class. It's a high performer, and that's how investments work for sure. Talk to me about how Celsius constructs your loan program, because I've been fairly impressed with, one, the yields that you guys are giving, and also the structure in which you're doing loans. Walk me through a customer's experience. I deposit some Bitcoin into Celsius, and down the road, 6 months, I want to do a loan with you. How does that work?
Sure. So you can come to Celsius with your Bitcoin or Ethereum, just deposit it, earn 6.2% on your Bitcoin, and not ever earn Bitcoin on your Bitcoin, and not ever do anything else with Celsius. It's not like you have to use our Cell token or you have to take a loan. These are completely separate services. But if you need to pay some bills, or you have a balance in your credit card and it's costing you 24%, you can take a 1% loan, 1% per year from Celsius, and basically pay off your credit card bill and pay us 1% a year. The reason we can do it at such low rates is because we basically create yield on your Bitcoin. We create income, and we're effectively subsidizing the cost of the loan because we're making that income somewhere else. So for a lot of people, this is a very, very attractive proposition because they get to keep the Bitcoin, they get to keep the appreciation, and at the same time, they get access to dollars. So it's a very easy process. Again, you just download the Celsius Network app, you make a deposit, you transfer it in, you take a loan, you get approved the same day. There's no credit check, there's no income check, because this is an asset-backed loan. And our customers have done tens of thousands of these loans, borrowing hundreds of millions of dollars. And you can go and check online if you find any unhappy Celsius customers. We've, I think, done a very, very good job for the community, enabling them to effectively, like you said, defer taxes and get access to liquidity.
So my question is, why are the banks not doing this? Why have they not opened up to, hey, this is a good business model. Why aren't we using this? What do you think is holding them back?
So if you think of fintech as an industry that kind of try to take down the banks or try to compete with the bank, PayPal, Venmo, all these services barely put a scratch on any bank, right? The banks are bigger and more concentrated than ever before. And really, banks did not have any competition for 700 years, right? I mean, the banking model of paying you less and less and less and earning more and more and giving it all to the shareholders have not changed in 700 years. So crypto is the first time that the pendulum is swinging from this centralization to decentralization. And the blockchain and this open ledger allows us, all of us, to transact with each other instead of using this trusted middleman, toll collector called the bank in the middle. So when the banks look at it, they see existential risk. They do not want to enable companies like ours or this service to grow. And that's why you're seeing all of this stuff, negative stuff coming out of the head of the banks and regulators and other people who are saying, hey, this is bad. It's not green. It's it's really bad for you. It's super risky. Do everything besides, why aren't we paying you? Celsius pays you 8.8% on your stablecoin, on your dollars, right? So if you take your dollars, turn them into USDC, a stablecoin, we will pay you 8.8%. Your bank pays you 0.5%. So
Right.
they earn more than 8%. You can look at their quarterly statements. They
Sure.
earn more than 8% on their capital. They just choose not to pay you. They choose to pay their shareholders. So
Yeah.
that the fact that they mistreated their customers for the last 50 years and they're stuck between a rock and a hard place. They cannot take all that money from their shareholders and give it to their customers because their stocks are going to crash and their bonuses are going to crash. And no CEO in his right mind is going to risk his job trying to help customers, right? Their job is the opposite of that. So that really what presented the opportunity. That's why we started Celsius, and we've been paying yield longer than anybody else. Before DeFi, before all these other movements that we all know about, Celsius really created this movement, and we took the front seat fighting with the banks for something that we should be getting as a right? I mean, I'm an immigrant. I came to this country 30 years ago. I used to earn 8% by just putting my money in Citibank and not doing anything. So all that was taken away from us. The Fed lowered the rates for the banks, but your credit card is still 24%. They didn't lower that to 18 or 16 or 14%. So all that is just showing you how the system is rigged and how the system allows these very large centralized institutions to really extract heavy toll from society, and the 99% are the ones paying it for it. If you're a wealthy person, you're not going to pay any of these fees. So inactivity fees, ATM fees, right, checking fees, all that stuff does not exist on the blockchain, right? Celsius does not charge any fees whatsoever, and it pays you 8.8% for your dollars, for your stable coins.
Okay, so in setting up an account with Celsius, do you have an infrastructure for businesses to where a small business can say, hey, we're going to put a little bit of our treasury, we're going to park it over here at Celsius, let it go to work? What's the process for a business to jump in?
Yeah, so you can definitely open corporate accounts. We also have, we have thousands of corporations using Celsius. We have over 300 institutions that are onboarded with Celsius as well. We do go through extensive KYC and AML to stay compliant. But if you go to our website, celsius.network, you can find a link to open a corporate account, and we will process it within a few days. And then as a corporation, you can use all of our services, our web app or mobile app, to effectively manage your balances and get the same yield. We pay the same rate for somebody with $1,000 or $100,000, right? The rate doesn't change.
Sure.
And that's really the big advantage of these services. And the rate is dictated by our lending activity, how much we're earning from institutions, exchanges, DeFi, retail, and so on. And as an aggregate, we have a blended rate that we publish every week.
Alex, do you think that we'll see the banks slowly moving into both either trying to become crypto exchanges or utilizing some ability to have some engagement in the crypto community over the next year?
Well, I think the banks are going to break into two categories. You're going to have banks that see this as an opportunity, probably the smaller banks, and they're going to try to offer these services to basically attract younger customers, attract customers for whom holding digital assets is an important piece of their business. And then you're going to have the more traditional banks probably who are going to wait as long as possible and not touch this and say bad things about it and scare their customers.
Right.
I don't know if you saw in the UK, but several large banks in the UK blocked all their customers from making crypto transactions, which I think is probably illegal. But the bank's job is not to tell us what to do and what not to do. The bank's job is to transact on our behalf. And it's shocking to me that I see it again and again. I see institutions deciding for their customers what they're allowed to do, what they're not allowed to do.
Yeah, and I think with Barclays, obviously the scenario was with Binance. Binance has had some struggles within the UK to get compliant. They've had some struggles in some other countries. But I think those are scenarios that eventually, and normally it's a regulatory scenario, which, hey, listen, you got to jump through this hoop and that hoop before we can, approve this. But in the meantime, whether they set up an escrow or some sort of security mechanism. It's much like what they do here in the U.S. for fraud control and prevention. I think that could have easily been the case. Blocking crypto, I think I would agree to your point, is the banks have looked at this in a very offensive position.
I'm talking about we see transactions every day that are blocked because banks mark them as
in general
fraudulent or as potentially whatever. And even though the customer will call them and scream at them, they will not approve these transactions. So I think the Binance situation is a unique situation. I'm talking more general credit card transactions, bank transfers that are being blocked routinely because these institutions are trying to effectively either slow roll or make it so so difficult or so full of hassle that you wouldn't bother. You would basically say, okay, it's too hard, I'm not going to do it, right? So basically they put speed bumps all day long, right? The banks that don't want to see these assets leave their coffers, and instead of paying more in interest, they choose to try to put speed bumps and give the customer a horrible experience, hoping that the customer will say, well, it must be Celsius, because if Barclays doesn't send stuff to Celsius, that means Celsius must be a bad organization. But most people, you cannot fool all the people all the time. And when somebody like Celsius pays 10 or 15 times more interest than you pay, and we've been doing it now for almost 4 years, the customers realize that the problem is with their old bank relationship, not with Celsius.
All right, a couple other questions here. Influencers, we've seen massive movement in the space from both influencers, from celebrity status, Hollywood jumping into it. We've got a lot of investment now coming into the space. And then we have, of course, Elon Musk. What are your thoughts about these people kind of moving in and out of this space? It seems to be an unusual characteristic and has an unusual impact on it. What are your thoughts?
Yeah, so it used to be totally not cool. Like if 2015 or 16, if you said, oh, I'm into crypto, people thought you were weird and stopped talking to you. Today, a badge of honor is to say, I'm in crypto, I hold Bitcoin, that makes you cool. You get a lot of new followers. So definitely you're seeing this mass adoption from all over the kind of the celeb sphere. Elon is a special case. I think, obviously he knows, he's a technical guy, so he knows more than he reveals. And the fact that he kind of one day plays with saying, I love Bitcoin, and the next day he loves Dogecoin, and the next day he doesn't like any one of them, is really telling me that he's just here to collect as many followers as possible. He's a tourist. He's not really interested in helping the community or helping you as an individual do better. The richest guy in the world is willing to swap your Bitcoin for Tesla. So you tell me who's going to get the better side of that deal if Elon's willing to give you a Tesla for your Bitcoin, right? So I think for most of us, we have to think hard about what these celebs, what's the hidden message behind what they're doing, right? And in many cases, again, they're not here to help you.
Yeah. I want to move on to another topic, and that is mining. Celsius has essentially moved into the mining category. You guys are now a multi-faceted company. Tell me about your mining operation. What are your plans? That's a North American operation?
Yeah, so we announced a few weeks ago that we invested over $200 million in mining Bitcoin in North America. Most of it is renewable resources. So it's mostly using hydro and wind and solar power, which is, again, we did this before the China kind of crackdown and everything else. And obviously it was very good timing because for us, what we're seeing, we effectively built a factory that makes Bitcoin. And the reason we need that is because every week we pay our customers in Bitcoin. So yes, we can create Bitcoin through yield, through loans to institutions and exchanges, but having a factory that also prints Bitcoin for you is definitely a great way to supplement or complement our existing business. And now our yield stool has 5 legs to it, a very, very stable source of yield that comes from 5 different sources that are not correlated. So right now, for example, the rates on DeFi are close to zero. So if you're just doing DeFi on Ethereum, you cannot compete with Celsius, right? I mean, you cannot give 8.8% on stablecoins or 6.2% on Bitcoin or 5.5% on Ethereum. But because we have these 5 different sources, we can maintain rates while all of our competitors are lowering their rates.
Yeah. How does that, okay, so I know you guys cut ties or the relationship ended with Prime Trust. Tell me a little bit about how you're actually backing these loans and these, is potentially mining going to be a way to help alleviate or add to your, somewhat of your portfolio to be able to continue these kinds of loan funding? How are you guys going to go about that?
Yeah, so first we're profitable, so it's not we're not relying on raising. Some of our competitors have to raise money every 4 to 6 months because they're basically losing money on their operations. And
Yeah.
Celsius, we are very open, very transparent with our community. We just launched Proof of Community, where we actually show you not just what you earned, but what everybody else earned in your bucket. So you have Bitcoin, you can see what everybody earned on Bitcoin, what everybody else earned on something else. So, and I think again, Prime Trust is just one provider. So just like you change cable providers when your cable company doesn't give you good service, we decided to switch to a better provider and provide our customers instant customer care. We had some problems with response times with Prime Trust, but we have not had any issues. I mean, we announced after this flash crash in the month of May, where Bitcoin, Ethereum were down 50%, we announced that was our most profitable month ever. And obviously Celsius is doing very well. We had 0 liquidations, 0 loans that went into default with any of our counterparties or institutions or people we Celsius borrows from. So again, this kind of transparency you will not find from your bank or from your financial institution. You cannot call them and say, hey, what are you using my money for? Who are you lending it to? How much did you earn on it? Am I getting the vast majority of those earnings, right? Try that with your bank. Let's see what happens. So, so we always strive to give more to our customers. And sometimes we switch providers when we find that the service provided to our customers. I went on Twitter twice apologizing to our New York State customers because, again, the service that was provided to them was subnormal, was not Celsius. And we just had enough and we decided to move on.
Interesting. Okay. All right. So maybe and that I think is where the pressure is coming. I mean, you've seen BlockFi. We watch BlockFi a lot. They've lowered rates on their access to. Yeah. So why do you think that's happening? I mean, we've got other companies that are not able to maintain at this level. Are they falling into the trap of the banks where they're trying to divert potential profits into some other areas? What do you think is the scenario there?
Yeah, so BlockFi really relied on 2 strategies. One was this GBTC arbitrage, which disappeared. Right. So all of that revenue source for them basically went away overnight. And they were also doing a lot of trading in futures and which basically, again, the cash and carry trade disappeared as well. So I think they're so those were some of their main sources of income. And when you don't have income, you have to lower your rates, right? So so they don't have 5 legs to their stool. They had 2 legs, and their stool fell to the side, and their customers are leaving.
Yeah, for sure. Ethereum, the flippening. You've talked about this. I'm interested in this one because this is a fascinating aspect of where we've seen Ethereum really start to gain in wallet density. Also in density overall in the market. You think Ethereum has actually already had its flippening? It's just a matter of time. What are your statements on that?
Yeah, so in 2017, we saw Bitcoin and Ethereum really get very close as to market cap. Ethereum was almost touching the Bitcoin market cap. And we've seen that again this year in May. Ethereum got closer and closer to Bitcoin. what I was saying is that on the Celsius network, right? If you look at our
Right.
assets, we manage about 17 billion in assets for almost 1 million customers. On Celsius, we already seen more Ethereum than Bitcoin, meaning our customers are holding more Ethereum in dollar terms than Bitcoin. So what I was saying is that what I see on Celsius is a leading indicator. It's basically telling me that the same thing is going to happen in the broader market in the next few years. It doesn't mean it's going to happen tomorrow, but over the next few years, we will see the market cap of Ethereum exceed the market cap of Bitcoin. It doesn't mean Bitcoin is not going to go up. It just means that Ethereum in absolute term is going to be bigger than.
Right.
And the main reason for that is that despite the fact that store of value is a phenomenal utility, it's something that is very important. Almost everybody in the world wants to get yield, and they mostly want yield on their fiat. Not everybody in the world is ready to basically put store value on something that is denominated in a non-fiat currency. So I just think Ethereum is going to have more customers long term than Bitcoin.
Yeah. Alex, on your 140 to 160 idea around where Bitcoin could be, where do you think the new threshold will be? Like right now, we're in the 35,000, scenario in terms of just some resistance here. Once we break past this, we get moving on, and we're still in this bull run. Where do you think that next layer of resistance is going to lie?
So we're definitely going to hit resistance at that 65 to 70,000 level, because that's the previous high. And
right.
So you're going to have a lot of sellers that think that is the top, I'm getting out. And then you're going to have what we don't know, since these are going to be new thresholds. We don't know how many sellers you have at 80,000 and 100,000 and 120,000. So my estimates are that we're going to have a blow off top, right? We're going to go up and then come back down with about a 40% correction from about 160,000. So that's what I'm saying. It's probably going to end the year at around 80 to 90,000. So those are my estimates. And again, it really all depends on how many sellers we will have between that 60 and 160,000 level.
All right. So let's talk about, you guys have been in the UK, London, kind of your home base. You're looking at, from what I understand, you're looking at some operations here in the US. How's the company going to be structured in the future? Where are you guys going to hang your hat?
Yeah, thanks for that. We have not changed we still provide the same services to all of our UK customers. We are doing more and more corporate activity here in North America. We'll be announcing some new partnerships, new deals, both in the capital markets and corporate side. And as part of that, we're beefing up our corporate activity here in the United States. But the holding company is still in the UK. We haven't changed that. It's more about us just building more infrastructure here in the UK as part of our expansion in North America.
With the banking regulations here in the United States, is it more difficult for you guys to come into this market? Do you feel like there's more loopholes you have to kind of jump through? What's kind of the challenge for you to be able to open up full boat here?
So I think there's pretty good and strong clarity both on Bitcoin and Ethereum. Both the SEC and the CFTC determined that this is a commodity, so I think most people know what to do with it. There is some ambiguity about the rest of the assets, but I would definitely not say that like we have to jump through loopholes or do something special in North America. We're definitely seeing tremendous both institutional and corporate adoption. And as part of that, we've hired over 300 people this year to join Celsius. So we're moving very quickly to basically be able to support and accommodate all of these new entrants to earn yield, take loans, basically get some of the kind of like prime brokerage services that you can get from Celsius by borrowing these assets. And so the volume of the activity has grown 10x. And we think of ourselves as a leader in the space. We have the most assets. We provide probably service to more counterparties than almost anybody else. And we've been doing this longer than anyone. So those are really the main reasons for this expansion. And this expansion is good for our customers, right? The more yield we can create, the more customers we can accommodate, because if we don't create additional yield, then people keep joining Celsius, we have to lower rates, right? There's less, the same amount of earnings has to be distributed with more and more people. So we always have to keep the balance between this mass adoption that we're getting from retail and corporate and
right.
our ability to generate yield from institutions.
With this move, I mean, because this really, I think, positions you right in the bullseye for the United States of becoming somewhat of a banking entity here, both from a loan aspect and maybe a treasury holding position for stablecoins and things of that nature. Is the debit card service available on Celsius yet?
Yeah, so first, we're not a bank, right? And I think both the OCC and some of the Fed have stated publicly that they are looking into the requirements for entities in the crypto space to receive banking charter or join the Fed wire system and so on. So all of that is being reviewed, and until there's clarity there, I don't think we can even apply or try to do anything in that space. As to Visa and MasterCard, who are issuing cards, that is a standardized program. We chose to partner with Visa, and we have not yet launched our cards. There's a waiting list. So we have a few tens of thousands of people who already applied and waiting for the card. And we hope to launch that in Q3 of this year. And again, this will be the first non-predatory credit card that actually helps you manage your balances, manage your wealth together with your existing crypto, basically, coins that you're holding with Celsius. So the challenge is really marrying these worlds in a way that is acting in the best interest of the customer and not in the best interest of the financial institution. That's what I don't think anyone has done yet. And Celsius is really trailblazing that path on behalf of millions of customers.
Yeah, for sure. Alex Mashinsky, CEO of Celsius, joining us today. Thank you so much, Alex, for all the insights. It's been great having you.
Sure. Thanks for having me.
All right. Okay, so you guys are checked in with us, maybe over on the podcast right now. Make sure and give us some stars over there. We love your feedback as well. You can check us out here on YouTube by just subscribing and hitting the bell, because that's going to give you notifications for great CEO interviews like what you just got. And of course, if you have an idea for a show, just shoot us an email to producer@revernetworks.com, or you can hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.